Hey, good to see you. So SpaceX is going public and four different investors just spent 5 hours explaining why that's either the trade of a lifetime or a perfect trap for retail. And they're not wrong on both counts. Here's the thing. Everyone agrees SpaceX will be one of the largest companies in the world. The IPO itself is where it gets weird. Tom Nash is telling people to skip day one entirely. Meet Kevin thinks a liquidity squeeze is already hitting the market. Joe Bhakdi is running DCF models that don't quite add up, and Cern Basher is sitting there saying the compute and Starlink moat is so good it's basically underpriced forever. They all watched the same Friday bloodbath. They all came to different conclusions. Let me break down what's actually happening. First, the market context. The S&P 500 dropped 2.64% today. Oil is up 3.95% to 96.77 a barrel. Gold is holding at $4,341 an ounce. The 10-year Treasury is at 4.54%. This is a risk-off environment. Volatility is high. And this is the exact moment SpaceX decides to IPO. That's not a coincidence, and it's not a sign of confidence. It's a sign that someone, probably Elon, probably his bankers, decided the window is closing and they need to move now. Here's where Tom Nash and I actually agree. An IPO is an event. Day one generates retail FOMO. You get a pop. Everyone on Twitter posts their limit buy orders. Then you get the hangover. Because the real value of SpaceX doesn't materialize in week one. It materializes over 10, 20, maybe 30 years. The Starlink business needs to scale to 5-10 billion people. The compute play hasn't even started. The data center angle is pure potential. Tom Nash's argument is simple. Why fight for shares at the open when you can accumulate at $42 in 6 months when retail has moved on to the next thing? And that's not crazy. That's patience. But Meet Kevin made a different observation. He's looking at the Friday sell-off and asking, what if this isn't just risk-off jitters? What if someone is already selling big positions ahead of lockup expiration? Insiders selling to raise liquidity before the IPO technically happens. That's not illegal. It's smart. It's what you do when you know how the IPO machine works. You move your chips before the retail players show up. Now here's where Joe Bhakdi went interesting. He's running DCF models on SpaceX, and he's finding what he called glitches in the matrix, projections that don't quite close, assumptions about Starlink revenue and compute scaling that feel circular. Not wrong, just uncertain. And certainty is what valuations need. When you can't model it cleanly, you have to guess. Guessing is where retail loses money. And then there's Cern Basher. He's the bull, not on the IPO, on SpaceX, the company. He's looking at three things. Starlink is becoming essential infrastructure, the compute play is real, and nobody is pricing it in. The data center dominance angle is unmatched. His argument is that the IPO is actually cheap if you hold 5 years. He's probably right about that too, but he's also probably not buying at open. He's waiting for the volatility to settle. So here's how I'm thinking about it. There's SpaceX, the company, and SpaceX, the IPO. The company will be huge. The IPO is an event. Events are for traders. Companies are for investors. If you're retail and you FOMO at open, you're a trader, whether you know it or not. You're betting that other people will push the price higher before you sell. That sometimes works. Most times it doesn't. If you're willing to wait, you're an investor. You're betting on Starlink revenue and compute dominance actually happening over a decade. That might work better. The consensus among Tom Nash, Meet Kevin, Joe Bhakdi, and Cern Basher is actually stronger than it looks. They all think SpaceX will be one of the largest companies in the world. They all think the IPO will generate massive retail volatility. Where they split is on whether day one is opportunity or trap. Tom Nash says trap. Cern Basher says opportunity, but only if you hold 10 years. Meet Kevin says the real move already happened in the pre-IPO squeeze. Joe Bhakdi says the models are too loose to trust right now. If I'm being honest, I think they're all describing the same thing from different angles. SpaceX is going to be huge. The IPO is going to be chaotic. Retail is going to show up in force. Smart money is already repositioning, and the actual value won't be clear for years. So the question isn't whether SpaceX is good. It's whether you're patient enough to wait for the FOMO to clear. If you are, this might be the buy. If you're not, you're competing with people who've been planning this exit for months. Drop a comment. Are you planning to touch the IPO at open, or are you waiting it out? If you want more takes like this that break down what the smart money is actually doing versus what retail is chasing, hit subscribe. And here's the thing that caught me. There's a kangaroo loose in Richmond, Kentucky. Someone's exotic pet escaped, and now there's an actual search and rescue for a kangaroo in the American South. I don't even have a question. I just need to know how a kangaroo made it to Kentucky and what the owner is thinking right now. The weird timeline keeps getting weirder. Thanks for being here. Hit subscribe if you want this in your feed every morning. Later.